Hi, everybody. This is Gary Dean, and this is our weekend video report for Sunday, February 26, 2017. Hope you guys are having a fantastic weekend, and let's get started. I put out on Monday morning in the morning notes is that I believed Friday was going to give us a lot of information, and one of the things that I was looking for is that uh, if we saw continued selling off of the futures that were down, um, it was right at a particular area that the ES, I was just following the ES at a time, have found support. So if we saw continued selling from the open, it would have been the first clue that we may have topped because it would have been breaking that fractal pattern on the drops. And really, what the pattern was is they've dropped just about the same amount, and it was in an ABC pattern, and we're all held up by the hourly 200-day moving average. We were there right then at the open, and so if we see buyers step in and they come back to the highs, it would appear to be business as usual for the bulls and nothing has changed. But then it would also, they would have to take it to new highs as a failure would set up another bearish pattern, which would be a double top. So the bears failed to break that fractal pattern on the futures, and it was pretty much, just we had a bounce off of that, and we just stayed right in the middle all day. It was kind of boring. The S&P was down like 4 or 5, and then it was the last 15 20 minutes of trading where all of a sudden it was the algos got triggered to buy, and we saw the S&P move up 10 points in 15 minutes. I mean, it was remarkable to watch. It was something that I wasn't really expecting, especially heading into the weekend, but it seems like that's the time period that they've been making these pushes. So it was business as usual. Nothing changed on it. Nothing has really changed in the overall pattern. And another thing that was pretty important is, I'll go over these charts in a little bit. There was just outright selling going on. And I was looking at this even when the S&P was only up like 4 or 5 points, so it was in that kind of consolidation phase. And there was selling going on with the spiders then. And when we had that last burst up, I mean, it dwarfed. If you look at the money flow, it was minus 369, and the block trades was minus 372. So this was just all out selling. And it's like I've said, it's something that is it's not a indicator that is, it has to turn right there. It's giving you clues that things are, there's people are unloading and selling the strength right now. So let's take a look at some of the other charts that are on the stock charts. And this is just the chart of the S&P and the VIX. And whenever you have bought in this area, when the VIX was down here and kind of consolidating, and you can see it's been a very, very similar pattern that we've seen in the past, it has not been a good time to buy because, first of all, either we get very choppy, which we've gotten. Now, it was getting choppy here until we had this melt up, which I've said numerous times. It surprised me. I did not see this coming. It's not going to be, it wasn't the first time I've been surprised by a move, and it won't be the last time. It's just, you take an educated guess on a side, and everything was kind of making sense for a top in this area here, and instead we had a melt up at the end. But we're still have the VIX in this area here with these massive divergence. Now this is the pattern that I find very interesting because each time we've been here, we've had these big divergences in the with the VIX, and you can see it taking place here. And whenever it's been extended, we've had these massive, just very, very fast drops. And I don't think that is going to be any different on this one. It's just a matter of when it's going to stop moving up. And we have divergences on a number of other charts. Time wise, it's there. As I showed you, sentiment is, as I showed you with the institutional selling going on, and we have sentiment at levels where we've been hitting 90 between 90 and 99% bulls for quite some time. So everything is there. It's the only thing that's missing right now is a break in price, and it will come. There's nothing that's going to go straight up or straight down, and when we get these extended moves, either to the upside or the downside, their reversals are usually very, very dramatic. And like I said, I don't believe this is going to be any different. So I want to show you a couple other things. This is the put call ratio. Notice how the S&P is continuing to go up as now we're seeing people starting to buy puts. So it's giving doubt to this move right now. And like I said, we see the put call start moving up before drops happen because big money or the smart money starts kind of hedging their positions. So I want to show you one last chart on this, and then I'll go to our regular charts. And this is just the S&P on a weekly chart, going back from the beginning of this rally. And what I've been showing you, where I'm looking for, this top to come, and I continue to say I'm expecting a large decline. I'm not saying that we're starting a new bear market. It's actually going to probably at the end be a fantastic buying opportunity. But there's also, for that to happen, we have to have that sharp move. And here's just the wave structure wise. So we have our 1, 2, and now we made a 1, 2. This was an extended wave 3, 4, and now we're making this wave 5. And once this wave 5 happens and it completes, this is going to be the wave 3. Now, what typically happens? Well, not typically. I mean, this is the Elliott wave count. There's only one thing that will happen, and that is that we are going to make a wave 4 to the downside. And seeing it bottom at where a previous wave 4 is very common with this pattern. So that would be looking for the S&P to come all the way down to the 1800. Now, am I banking on that for this trade? No, not at all. I'm just kind of showing you the pattern that we're in, where even if we went down to 1800, this is still just a wave 4, and we're going to have a wave 5 that's going to take us well above whatever highs we make right here, and probably send us into close to the 3000 level. Who knows? But this is what I'm looking for, this wave 4. And like I've said, we have bearish divergences. We have a lot of other things that are hinting towards that is what's going to play out, but we just kind of have to wait for this wave 5 to end. So let's this is what I was talking about on the ES. You can see this is the S&P futures. You can see right here, these are the fractal patterns where it was just, again, A, B, C down. And this was approximately the points down that it went down. That's these yellow highlights. So you can see we actually went a little bit lower than it, but I had mentioned that it's been the 200-day moving average on the hourly chart, which this is, that's been holding this rally up from really going all the way back to the February 8th. So if we would have seen a break here and continued selling, it would have been the first clue that the top was in, but they didn't do that. And from there, we saw a rally, and that's how we ended up on Friday. The S&P futures up 175. So let's take a look at our regular charts, and this is the S&P, and this is on an hourly chart. We have the bearish divergences. We have extremely, extremely overbought levels. And again, what we're waiting for is this wave 5 that just doesn't seem to want to ever end to complete. And once it does, that's when I'm anticipating the larger move to the downside. But I've been pretty open with, that wave 5 is going to end when it ends. It would have made a lot of sense to have topped, and we may be making that double top, like I mentioned in the morning notes, where, we're right back up here again. So once this completes, that's when I'm really, really believing that we are going to have a much larger break to the downside. And the fact that, we're seeing a lot of retail folks jumping in here, it would make a lot of sense for them to get trapped on here. So maybe this is a double top. The only way this is going to happen is if we see selling right from the open and they don't come back up again. And really the main thing that we have to see, because when I was showing you the S&P futures, that was being held by the 200-day moving average. But if we just move to the cash, because that moves different because it doesn't trade 24 hours, you can see it's really been it's been the 50-day moving average. So this is what the bears have to push through. It's going to be the 23.54. And from there, we should see a very, very quick drop down to this 23.04. Now, there's support again at this 23.40. So from 23.50, 54, it should be just pretty smooth sailing on the downside down to the 23.38. If they lose, if the Bulls lose that, that's when it should be a pretty quick move down to this to the 23.04. Now, if it continues lower on that, then we're obviously going to say that this topped, and the expected move would be anywhere from this the 22.88 all the way down to the 21.80. And you can see we're trading above the channel right here, which is it means that it's actually deviating from the actual normal price movement that started all the way back in 2016. So every time we've come below it, it's been a great buying opportunity. And this is really the first time it's trading above it. So that's why I think it's going to be a fantastic downside move. And like I said, 21.80 makes sense because it would be a test of the 200-day moving average. So right now, like I said, it's a little frustrating to watch. Where things look like they're going to go the way that we're expecting things to go, but it's wiped out in the last half hour. But that's not always a really bullish thing, because if we just take a look at the shorter term charts here, so we had selling going on here. It was pretty much selling and buying, and then a last 15-minute run, or say 30-minute run, to bring us positive. And again, we don't really have any breather on a daily chart basis. And even though we're ending higher, we're seeing a majority of the day selling like we have, and it doesn't do anything as far as burning off any of these overbought conditions. And you can see going all the way back from the 8th, we've had 2 down days that have been very, very minor down days, like down a point or so. So that these aren't, it doesn't help burn off these overbought levels. And you can even see it on the 60-minute chart, where we haven't even started to move down. So it's setting up for the large move to the downside. I wish I had a better idea as far as when is it going to start. It could start tomorrow. I'm not 100% sure on that, but I still believe selling the strength is the smarter move here. And it's really going to be a patience thing, where you have to buy time and not anticipate that it's going to happen overnight. If you're buying options, go into April, just to give yourself some room on it, because when it does break, it's going to break down to the downside, and it's going to be really, really sharp. So with that, enjoy the rest of your weekend, and I will talk to you guys tomorrow.